What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information, stay for the random clips. When I started this channel late last year, I told you there were two major themes that were taking place: the electrification of transportation and the commercialization of space. We closed out 2020 with Tesla being included into the SP 500, confirming that EVs are the future of transportation. In fact, the very first video I posted on this channel was about how Tesla was leading the way and causing the entire automotive industry to shift gears. Most have now committed to being fully transitioned by 2030. On a space commercialization front, SpaceX single-handedly proved that a private company can safely transport astronauts to the ISS, something that only government agencies such as NASA or Roscosmos could do up until now. And this month alone, we had both Virgin Galactic and Blue Origin prove that space tourism is safe and feasible. This is all possible due to the advent of technology, which brings me to the third theme of this channel and my investment journey. That would be crypto. So in today's video, I'll go over the TheBWord conference key takeaways. B stands for Bitcoin, not something else. Answer the question of what Bitcoin, Ethereum, and Doge have in common, and why you should consider them for your own portfolio. And no, it's not the fact that Elon has all three. By the way, that was a surprise and something we learned this week. And finally, I'll wrap up with my portfolio performance and some announcements. Drop the video an early like for the YouTube algorithm, and let's get into it. The conference took place this Tuesday, July 20th, with the goal to address many of the misconceptions around Bitcoin, its energy usage, and its utility. A ton of great content. I'll focus on the main takeaways from the discussion between ARK Invest CEO and CIO Cathie Woods, Square and Twitter CEO Jack Dorsey, and Tesla Techno King and SpaceX CEO Elon Musk. The discussion was a little over an hour long, and it's definitely worth a listen in my opinion. I'll link it in the description below for your convenience. So what did we learn? Well, Elon truly supports Bitcoin and wants it to succeed. In fact, the only other investment he noted that he owns outside of the shares in his private companies is Bitcoin, Ethereum, and Dogecoin. It was the first time this was officially disclosed. Elon also confirmed that SpaceX, similarly to Tesla, has some Bitcoin on their balance sheets. This was also breaking news, first time disclosing this. Jack Dorsey hit on the importance of giving back to the community by promoting decentralization. He views Bitcoin as the money of the internet that everyone will be able to use in the future and is committed to that vision. Jack also noted the high likelihood of Twitter accepting crypto payments in the near future. Elon laid out the potential he sees for Dogecoin, more on that later. And Cathie focused on the long-term view and explained why Bitcoin and crypto is such a massive investable opportunity. Basically, she equated the whole space to the early days of the internet. Ultimately, it was a great opportunity for Elon to clear the air, further explain his concerns around the environmental impact and possible ways for the mining industry to accelerate the transition to renewable energy. He cited, of course, the benefits of wind and solar plus battery storage, which, of course, again, Tesla could supply. As an investor in Tesla, this is definitely something I've been thinking about since we found out that Tesla owns some Bitcoin. And this was great to hear it, the opportunity vocalized as a future source of revenue for Tesla. But what I want to do next is really further expand on this notion of crypto being similar to the internet in its early days and what Bitcoin, Ethereum, and Dogecoin all have in common. So let's talk about that. I've made that very analogy in the past, and it was pretty cool to hear the likes of those three share in the same view. First and foremost, you need to shift your mindset when you think about crypto. And what I mean by this is that it's not just funny money created out of thin air that goes up and down on a whim when an influencer like Elon tweets. Each cryptocurrency has a dedicated network behind it with a use case. At the most basic level, the native token simply allows for data transfer to occur, and network capability and ease of use drives adoption. The value goes up and down as the number of users increase transaction volume. Let me go ahead and play this short clip from Elon, and I'll come back with some additional discussion points.
Bitcoin by itself simply cannot scale to be the monetary system for the world at base layer. But with a second layer, this is possible depending upon how that second layer is implemented. That's part of why I think there may be some merit to something that may seem silly, like Ethereum, like Dogecoin. I think there's some merit to. This is not a slam on Bitcoin. There's some merit to considering something that has a higher max transaction rate and a lower transaction cost, and kind of seeing how far you could take a single layer network where the exchanges act as a de facto second layer. I think you can probably take that further than people realize. And as bandwidth increases over time, latency decreases. SpaceX's Starlink is actually playing a role in this. And I think long term, people will probably have access to worldwide access to gigabit level connectivity at low latency, and so at low cost. And so then your base layer could do a lot of transactions if you take that into account. And that trend is obviously in the direction of higher bandwidth and lower latency. And if somebody else doesn't do it, Starlink certainly will.
There is some profound implications to what he just shared. I've said before that the true potential of Dogecoin is to serve as a worldwide currency, and Elon not only laid out that vision, but also provided at a high level the convergence of improvements and technologies needed to make it happen. The key here is that what's needed already exists and simply needs to be scaled up over time. So then what Bitcoin, Ethereum, and Doge have in common and sets them apart is their brand recognition and resilience. That is what created a network effect with a growing community. There's a reason why crypto ATMs are called Bitcoin ATMs. ETH addressed many of the shortcomings of Bitcoin and as a result became a strong recognizable brand as a preferred network to transact on and build upon. Doge, through its community, remained resilient over the years and is now seeing improvements that allow it to further differentiate itself as a currency simply due to the low cost and network transaction speed. The bottom line, these three networks will continue to grow and likely dominate for years to come. Now, being associated with Doge is free advertisement and instantly gives you access to a vast pool of customers. That is the main reason why Doge has been gaining traction and most recently was added to Coinbase e-commerce. It is also why development work to make it cheaper to use, faster to transact on, as Elon suggested, along with gaining some deflationary properties, is being pursued by Doge devs and independent Doge Lab. Whether you realize it or not, the vast majority of stablecoins, NFTs, and DeFi is built on top of Ethereum. That network effect is the reason why the legacy financial system is incorporating with Ethereum. It's the reason why social media platforms like Twitter, Facebook, and e-commerce giant Amazon are either building on top of Ethereum and or exploring ways to incorporate crypto payments. The reason for this? Well, I'll just quote Amazon directly in their press release. We're inspired by the innovation happening in the cryptocurrency space and are exploring what this could look like for Amazon. We believe that the future will be built on new technologies that allow modern, fast, and inexpensive payments, and hope to bring that future to Amazon customers as soon as possible. It's the same reason Gen 3 networks come with interoperability. Think Cardano, Polkadot, Chainlink, AMP, and the list goes on. They each are able to connect and move information into Ethereum because they are either built on top or were designed with capabilities to allow users to move freely back and forth between the native network and Ethereum. So at the end of the day, it would be foolish for anyone building on the blockchain to silo themselves from Doge, Ethereum, or Bitcoin. And for context, if you needed more, a recent study by Gallup, which is an analytics firm, shows that the Bitcoin adoption curve is faster than that of the internet, mobile phones, and any virtual banking to date, period. So they conclude that it took 12 years from inception to now to gain approximately 135 million users, and they project that number to rise to 1 billion users by 2025. That's only 4 years away, people. That's 4 years from now. So now ask yourself this. What does that type of growth do to the current price of Bitcoin, knowing that the supply, again, of Bitcoin is limited to 21 million? So at the end of the day, I'm not a financial advisor, so make sure you do your own research. That said, if I could advise you, I would tell you that these three, along with the ones I noted earlier, are opportunities that you'd want to take a hard look at, right? The next 5 years are going to see some drastic changes and a significant transfer of wealth to those paying attention to these themes. So again, it's the electrification of transportation, the commercialization of space, and last but not least, the crypto space with blockchain technology. Okay, so let's switch gears and talk weekly portfolio performance expressed in percentage gain or loss. Monday started off with a direct drop during pre-market hours to 5.03% in the red. This was the lowest point of the week, and you can essentially write Delta variant on that poster, and the person holding it, well, that's pretty much every major media outlet reporting on it. Of course, the market tumbled, and this is a pretty good representation of it. But let's face it, it was the perfect excuse for portfolio managers to cash out some gains on the back of very strong earning results last week. Anyone telling you otherwise at best doesn't understand it, at worst is blatantly lying to you. Every major index erased Monday's losses and went on a 4-day winning streak, closing pretty much near the all-time highs at the end of the week. So you be the judge. At the highest point, I was in the green by 14.46%, but dropped a little bit since then and closed the week a little bit lower at 9.25%. Not too bad and promising considering that crypto continues to recover. Couple of quick announcements to make. Tesla earning after market close on Monday. I'll give you my thoughts and takeaways next weekend. Another one to pay attention to is Visa. Why? In the first 4 months of this year, Visa reported that more than $1 billion was spent via its crypto-linked cards. I mean, that is massive. Definitely interested to see how that translates down to the bottom line at the end of the quarter. Now, the last item to mention here is that I will be heading to Texas next weekend on vacation, so the video will have a slightly different format and feel to it. But with that, this will do it for today's video. If you enjoyed the content and found it insightful, please drop the video a like, as it greatly helps the channel. For my newcomers, remember to hit the subscribe button and ring the notification bell so that you don't miss out on any future content. Next weekend's video will be focused on Tesla and the takeaways from the earning call. Again, thank you for watching, stay humble, hustle hard, and I'll see you here next Sunday.